Welcome to the Lady Landlords podcast, where we empower women to gain financial independence through real estate investing. I'm your host, Becky Nova, founder of Lady Landlords. If you're ready to buy, manage, and grow your real estate portfolio, then let's get started.
Do you know the best type of rental to be able to buy? Here today, I'm going to be sharing with you the type of rental that I feel like nobody is talking about on the market right now, that nobody is looking for, and I think it might just be a great opportunity for you if you can get it before the other people out there. So, hi everyone, my name is Becky Nova. I'm the founder of Lady Landlords, and today we're going to be talking about the three basic types of rentals out there when we are going out shopping. I think this is always incredibly important because I think by the time you are already going out to showings and by the time you are looking at properties, you should already have an idea in mind about what your strategy is, okay? If you don't, you want to take a step back. You want to make sure that we can actually first focus on what your strategy is. If you need help with that, feel free to reach out to me, drop down in the comments letting me know strategy is something you need help with, and happy to reach out and find a time for us to connect. But I feel that there are a lot of investors that tend to skip that step. And I feel like you can tell that when you start to see messages saying like, oh, I bought this property, I don't know if I'm making any money, or even worse, I'm losing money on this property, or I don't even know what's going on with this property. We should not be in a place where we don't know what the outcome we're looking for from purchasing a property is. So it always really starts with that upfront strategy and understanding what you're doing with that property. Because of that, I'm going to go through three different types of just general rentals that you can pick up. And I want you to start thinking about which one of these three is going to fit with what you are looking to accomplish within real estate, okay? And listen, what you're looking to accomplish in real estate today can absolutely change in the future. So if you pick one of the types of rentals that we talk about here, that is totally okay if then in the future, all of a sudden things in your life change, things in your plan change, and then therefore you would like something different. It's okay to switch between the three of them. I actually switch between the three of them rather often, and I'll share how that works as we kind of go through. But the first option that I want you to think about is the idea of a turnkey rental, okay? I always kind of ask people to think about like what their time is, what their finances look like, and really do an assessment of those items before they even get into this, right? We need to make sure that we have the monies to be able to buy. We need to make sure that we have the time to dedicate to really setting our property up for landlording. And with that, sometimes turnkey properties are a great option for people. What I mean by turnkey is really put that key in the door, turn it, and you are ready to go. This could be if there are already tenants in place. This could be if it's an item that is completely renovated and there is no work for you to be able to do. There are some really great benefits to this. There are, interestingly enough, there actually are companies out there that provide turnkey properties to investors like yourself, okay? What I mean by that is they'll rehab properties, make sure that they are updated, and then sell them to you, usually even with tenants put in place. So the property management comes along with it, the property's all set to go, and really all you have to do is kind of sit back, and this is probably the closest you're gonna get to mailbox money in real estate. The caveat I wanted to add to that, remember, things always do happen. You still are responsible for paying for them, and even if you use a property manager, you will still be managing the manager, okay? We have other episodes on the Lady Landlords podcast that talks all about that, so feel free to go take a listen to our property management episodes if you do need more support with that. But when we think about these turnkey properties, these are really great for somebody that's saying, right now I have more money ready to go, but I have less time ready to go, okay? So if you're saying, hey, I'm in a good financial place right now, I can put my down payment down, I'm able to buy the property, but unfortunately I'm just not in a position where I am able to really do that rehab and manage it, and it's just not something I want to take on. You could be new to real estate. You could be changing jobs right now. You could just say, I want to enjoy my summer, and that's what I want to do this year. That's also okay. Turnkey properties are a great opportunity to still be able to grow your portfolio, but usually don't require as much time, energy from you, but they will probably take a little bit more money, okay? With those, kind of your cons of that is if you are a person that does not have a ton of capital just kind of lying around, turnkeys might be a little bit difficult for you. The reason for that is if you were looking to purchase a property that then would appreciate, or where you can have forced appreciation by doing work on the property, well, you're not going to have that with turnkey, right? It's going to be kind of too clean, too fresh, too new, that there's not going to be any value add there. So you're not going to be in a position where you can really refinance, where you're going to be able to say, hey, let me pull a ton of equity out. You're not going to be able to do that for years on this, okay? I always like to relate this to the idea of buying cut fruit, okay? It's just the analogy that works in my mind. Think about it. You walk into a grocery store, you want some fruit, you go over, it's summer now, let's say we want a watermelon. You have two choices. You can either go over and you can pick up that watermelon, and you could sit there and you could take that whole thing home. It's big, it's heavy, you're gonna have to go back, grab a big knife, hopefully don't slice off a finger, cut that thing up, make sure to throw out things. You're gonna have watermelon juice all over your countertop. It's gonna take some time, right? But you were able to probably get that at a much lower price point. Or the other option you have at that grocery store is those little pre-packaged containers. They already have the watermelon cut up. They have it in a nice little cup for you. Sometimes it even comes with a little fork for you. Sometimes they probably already picked out the seeds. That, my friends, is what a turnkey property is. It is really something that by the time you're even walking out of that grocery store, you can pop the top off of that and you're already able to eat your watermelon. If that is something that you're saying, yes, for my summer of 2025, that is the type of property that I am looking for, is that turnkey property. Let me know down in the comments. Let me know if that's something that you're looking to purchase. But it can be a great opportunity to pick up a property that's already well put together and really cash flowing on day one. Let's talk about this idea of buying a property with tenants already in place. When you have tenants in place, they know the property well, which can be really fantastic. What I think is great is sometimes when you have a property and it is turnkey and you have tenants in place, you have a good track record that you can check to make sure that they're paying on time. They know what days the garbage go out. If you have a multifamily, they know what side of the driveway they park in and what side of the driveway the other tenants park in. You can have all of those things really running nice and smoothly when you buy that property. And then at the very closing table, you get that first check from your tenants, okay? Honestly, there's kind of nothing more beautiful in my opinion. But that's really your turnkey properties, okay? Let's swing to the complete other side of that and let's talk about some total rehab projects, okay? Those total rehab projects is going and buying that watermelon and taking it home and cutting it up and putting that time and energy into it, but you can really save a couple bucks. This is something that I think really fits well for those that have more time but have less money. So to me, it's really the inverse of that turnkey, okay? If you have a turnkey, really works great if you have a lot more money than you do time, but the rehab projects are gonna really work well if you happen to have more time, but you don't necessarily have as much funds, okay? With that rehab, just like my watermelon analogy here today, is what's interesting about that is, once again, you're now gonna take that home, you're gonna cut that up, you're gonna have to put in kind of that sweat equity for it, right? But like I said, you could save a couple bucks. With that total rehab property, you're really looking at the possibility to make sure that you're doing the work the way that you want, making sure that you have the property with the finishes that you want, that you know that you use quality contractors, or that you even did some of that work yourself and you know what you're able to do here. You're able to find your own tenants. You're able to screen them the way that you want. You're able to qualify those tenants you want. So once again, this is a bigger time commitment, but you're also probably looking at a little less of that competition. You're looking at probably better price points that you can get for property, right? Cut fruit is always expensive, right? At Whole Foods, think of the airport, you're paying top dollar for that. If you're then in a position where you're saying, hey, I can take on some of that work, because of that, yes, you're gonna have probably less people that are gonna wanna buy a gut rehab, right? You're going to have a lot less people that are going to say, hey, this is the work I want to do. When you think about it within Lady Landlords, and I get it, we are a large community. We have over 50,000 women in our Facebook community. We now officially have over 10,000 women on our Instagram. But when you are looking to be able to pick up those properties, you're going to be looking at going up against other investors. Totally natural. But believe it or not, even with those numbers I just stated, that's actually not the most amount of buyers. The most amount of buyers are usually family people. They're people that are looking for their own home. They're looking for, this is the place I'm going to live. They're looking for a place they can raise their family for their very first home where they're going to be able to live. They're usually not the people that are out there looking for those rehabs. They are the people that are looking for a place to actually live, whether it be, 10 years, 20 years, 30 years that they plan on playing in that space. So that's really cool because now with rehabs, you're already looking with that less competition than you would for that forever home that you're kind of competing with. For example, I always think it's great whenever we come around to like March, April, a lot of people, especially in my area in New York, end up putting their properties on the market at that point in time, which can be really cool. And you're always sitting there and you're like, yes, now after winter, now after snow, people are out there, they're really looking to be able to move, they're looking to sell and all that. And it's awesome because there's a lot more opportunities and a lot more properties on the market, but you're now competing with those people looking for their forever home, right? Those are the people that are saying, well, I have to buy this property because my kid needs to be in that school district and I need to move during summer. So they're probably going to be willing to waive contingencies, to go over ask, to make some different decisions than you as an investor who once again are looking for a profit. You also are going to be competing with people that are looking at things from a very emotional perspective. Oh, this is the perfect kitchen for my family. This is the perfect neighborhood, the perfect background. And once again, when people have that emotional response to something, they're not thinking the dollars and cents like we should be as an investor. Okay, so that's now your complete rehab properties on the other side. So let me know down in the comments if a rehab property is really the way that you've been planning to go or what you've been really focusing on in your portfolio. I'd love to see who's looking for those turnkeys versus who's looking for that total rehab. The great positive side about that total rehab, one, even if you personally don't know how to do all that work, what's really great is that you can always find people that can do that, right? So there's still ways to be able to get that done. I hear a lot of investors, as they're first starting, they don't want to take on a full rehab, and I totally get that. And that's what I think is really great about those different options. But with a rehab, you do tend to have a bit more of that potential if you need more capital to be able to grow your portfolio moving forward. What I mean by that is there's a strategy that's been made popular over the past couple of years called the burst strategy. Okay, this is where you buy a property, you rehab a property, you rent that property, you refinance that property, and now you're able to repeat that strategy. The way that you're able to repeat that, and just in basic terms here, we have a whole nother episode that dives into the burst strategy on the Lady Landlords podcast. But really the beauty of that burst strategy is when you buy that property at a cheaper price, and then you make improvements, additions, whatever it is to add value, that forced appreciation on a property, when you refinance, you actually can take that money out if you so choose to, right? Yes, you can absolutely go sell. If you want to go sell, and then once again, you can take that profit and move on to the next project, totally cool. But with the burst strategy, it allows you to still be able to take that money out of that property and use that down payment again for the next one. So you're not saving, buying. It lets you move forward with that. But you still own the asset. The house is still going to appreciate over time. And you have renters in there. So you'll still be making money from that perspective and having that cash flow coming in every single month, right? So two different ways that you can really go with that rehab type of property. What I like about this for a lot of people is it allows you to be able to build capital, especially once again, if you don't have a ton of money. And now you're saying, well, great, I have down payment for one property, but I don't have a down payment for 3-4 properties. Great. This burst strategy can be a great fit. So those are things that I've actually really switched in between over the past couple of years of having those two different types of strategies with that. There's definitely been times in my life that I was like, nope, turnkey property is what I am looking for, right? That would be times like, for example, when I was buying during COVID. I was one of the few investors that I knew that was actually still out there looking for properties in that point in time. But the cost of goods, the cost was completely changing day by day. There were supply chain issues. The cost of wood was through the roof. If anybody remembers during the pandemic trying to go to Home Depot for anything, honestly, I think there were probably longer lines and more people at Home Depot than there were even at grocery stores, because everybody was stuck home and working on just home projects that they probably couldn't get to for years, or just to increase their own quality of life while they were at home. But during that time, to be honest, I felt uncomfortable doing a lot of work during COVID, just because one, cost of goods were completely unpredictable, but then two, also labor. One, you had labor shortages because, once again, a lot of people were looking to get work done on their property. But two, especially in New York, we were really on lockdown for a very long time. So you couldn't necessarily have people on your property. You didn't necessarily want a group of people walking through your property. If I had tenants in a property, they weren't going to want people there either. It was hard enough to deal with tenant turnover during COVID. Definitely not that time to have a whole bunch of other strangers that were there that were doing construction, or meeting other contractors for quotes and such. So I really shifted and purchased more turnkey properties during that point in time. There were times, though, that we went the other way and said, hey, a rehab was made a bit more sense for us. The second property that my husband and I bought in Yonkers, New York, it was a 4-family, also had a parking lot attached, which was fantastic, but that 4-family needed a ton of updates. We bought that property from hoarders who had owned the property for like 30 something years. I gotta be honest, and I've shared these pictures. I haven't shared them in a while, Lady Landlords, and I probably am gonna put that in the Facebook community later today. But I shared those pictures because you couldn't even walk down the stairwell. You couldn't even walk through the hallways just because of so much stuff that these hoarders had had. So you can imagine, if this is what their hallways look like, you could probably tell that, they really weren't people that were doing maintenance. They really weren't people that were doing a lot of upkeep. So at that point in time, it was 2019. My husband and I had bought our first property in 2018. In 2019, in May of 2019, we closed on this new property. We got married and had to pay for, and we're paying for our honeymoon, and we're leaving for our honeymoon. That was something, to be honest, even with those things going on, cash reserves were a little bit low at that point in time, after paying for wedding and honeymoon and everything like that. So to be honest, it made more sense for us to pick up a property that we knew was going to need some rehab, because we knew we'd have that forced appreciation. We knew we were able to get that property at a lower price. Those were the trade-offs that we had to make at that point in time to make that property work. We had to say, cool, this is a property that we're gonna need to do some work. I've shared this story on the podcast before, but I will never forget. My husband and I were in the Maldives. Maldives, that was like my dream place to go for a honeymoon. They have those over-the-water huts, and at nighttime, lights are just off, and it is just dark and silent and relaxing, until you get a phone call at 2 o'clock in the morning in that overwater hut from your contractor. And when your contractor's calling you at any time, you want to pick up the phone. But our contractor actually FaceTimed us at 2 o'clock in the morning on our honeymoon in the Maldives to show us, and did a FaceTime walkthrough of the rehab that was going on in New York, right? Because it's a 12-hour time difference. So for them, it made sense. And I will never forget how excited the contractor was that they installed a new toilet. And that's what we're watching on FaceTime. And that's what he called to show us, just the updates of this bathroom. And he was so proud of the installation of this toilet. I gotta say, I will never forget that. But with what we needed capital-wise, with what we needed to be able to grow our portfolio, with what was kind of going on in life at that point in time, from a cash flow perspective, to be honest, there was not a ton of funds there to go out and buy another turnkey property like we did the year before. So we really had to switch between those. So I think it's great that you can flip through those different types of rentals as you see fit. And also, it's going to really work with your strategy. Once again, evaluate your time versus your money. And that will really help make sure that you can decide which one of those strategies might be a fit for you. Now, the gap in the market that I'm seeing is a kind of a little bit of a different type of rental here. And this is what I want to talk about today. I am so fortunate that my entire day I get to talk to investors, I get to talk to other lady landlords, I get to see what's going on in the market this whole time. I talk to realtors, I talk to lenders, I love networking, I love meeting people. And there's been an area that I feel is a missing gap that nobody else is talking about in the market. This came from some showings I was recently doing. If you've been a part of our Lady Landlords community for a while now, you will know that I'm actually pregnant with our first child. And my husband and I have been looking for our first new primary residence, as now what's going to be a family of 3. So that really has changed the game of what we're looking for. Usually we buy for investment properties. We don't usually buy for ourselves, right? We always kind of come last as we've been building this portfolio. And as we were looking, a lot of the properties that we were out seeing, and we saw a ton of properties. I can't even count how many properties we probably saw. But as we've been looking, there were some trends that I really noticed. And what was interesting was I feel like there used to be properties that had that cosmetic upgrade need. Carpets out, cabinets in the kitchen maybe updated, tile in the bathroom needed to be changed. And not full gut rehabs, right? So we're not talking about that full burst strategy. We're not talking about a full rehab here. But those properties that just needed some cosmetic updates, a couple $1,000s, maybe between, a $10,000 to $30,000, $40,000, we'll kind of put in to this category. But like really not such crazy things. But in that cosmetic upgrade kind of space and here in the middle between a turnkey and a full gut rehab. But those properties in the middle, those cosmetic updates, what was interesting is that nobody was picking those properties up. Not in my market, not in New York. There was not the competition you saw for the turnkeys. Nobody was looking at like the gut rehabs. Those were really still left for the creative financing people, for the investors, which is great. But there's still competition there. Once again, we have over 50,000 women in Lady Landlords. There's still competition for rehab properties. There's still other investors all across the United States that are picking up those rehabs and have teams and that can really churn out that rehab. But on the other side, I've noticed that most people that were looking for their longer term home, their own personal home, were looking for perfectly turnkey. They weren't willing to do those cosmetic updates anymore. And I think really a place that comes from in our market, the way that I'm seeing it, is people aren't really going and buying that house for 30 years anymore. They're not saying, hey, this is the house that I'm going to live in, have my family here and be here until they're grown, they're out of the house, until I retire. And I think that's just a bit of a difference in how our world works than it did 30, 40 years ago. You used to have people, you climbed your way up through the mailroom, you had your high school diploma, you worked at a company for 20, 30 years, you had that stability. Also, kids used to share bedrooms. I know I did when I was a kid. I'm the middle child. I have 2 brothers. I had my first bedroom with my older brother. Then when he got older, he moved out, and then my younger brother moved into the room. But we shared rooms for quite some time. Now I feel like that's a little more taboo. So as families are growing, people are moving. There are job opportunities in different spaces now. It's much easier. You see companies moving more from tax perspectives and just state regulations that are having people move different states a lot more. Now, post-COVID, a lot of people are still work from home or some type of flex opportunity, or maybe even fully remote. With that, people are saying, well, let me take my New York salary and go live in a cheaper cost of living state or area. And I think that has really changed where people are not saying, hey, this is the house that I'm going to live in for 30 years. But this is the house I'm going to live in for 5 to maybe 10 years max. Because of that, because they have that shorter timeline, they don't want to do cosmetic updates. They want to move in and be ready. So now the word turnkey is not, okay, hey, it needs a fresh coat of paint. Now turnkey is meaning something different to those that are looking for a new primary, because that's now saying, I want to go and be able to just move into my own home. I don't want to do painting or carpets or some of that really just simple kind of upgrades that we used to put in that category of cosmetic updates. I feel that there's so much more competition. I feel like that's what I'm seeing in my market as what's going fast, what's going over ask, what's getting contingencies waived, what just has absolute open houses flooded versus what just sits. There was a property I saw in New York a couple weeks ago. Gorgeous house. It was absolutely great. I loved the layout. I loved the setup. There were like one or two things that, could have been updated. But that property has 2 price reductions. It's been on the market for probably about 6 weeks now. I was shocked. Honestly, I thought it was really well priced. I thought the comps made absolute sense for it. I am shocked that nobody's picked it up. Great location, great neighborhood. And also it was so well maintained. But hey, carpets need to be changed and they need to be painted. Nobody wanted to pick that up. And I was really surprised by that. And that's where I feel like there's an opportunity between the turnkeys and between the total rehabs. So I'm kind of calling this like the mini burr space, okay? Now, the benefits to this I feel like I'm seeing are less investors, at least for now. But you got less investors there. You have less competition from the actual people that are looking for their primary residence. But you also have the opportunity to still have that forced appreciation and still be able to either refinance, which is great with the way that our interest rates are looking now, but you still have that opportunity to pull out some equity. Yes, it is not going to be the same amount of equity if you did a complete gut rehab as you did in that example that I shared with you a few minutes ago. But for an investor that's saying, I want to get started, I don't have a ton of money, I don't have a ton of expertise, Becky, where do I go? I think this mini burr space is really going to be a bit of a wave of the future. And I think that this is going to be a game changer for so many different lady landlords, new investors, really trying to hit the ground running, and just the place where it doesn't seem like a lot of other people are looking. So share with me down in the show notes. Do you feel like that is going to be a space that you would consider investing? Is that worth it to you? Or do you see other pros and cons to it? Let me know. I'll be checking the comments. I would love to hear what you're looking for. And if you're out there, which one of these 3 types of properties are you looking for? Those turnkey properties, those rehab properties, or those properties in the middle that might just be your silent sleepers? Let me know. Also, please do make sure that you do subscribe to the Lady Landlords podcast. Hit subscribe on either YouTube or Spotify. Or if you happen to be watching me on Facebook, do make sure to go click my name, click follow, so that way you do not miss the next episode of the Lady Landlords podcast. Thank you so much for joining me. We release new episodes every single week, and I will see you back with some more tips about how I grew my portfolio to a 7-figure portfolio in under 3 years. If you would like to learn more, feel free to either join the Lady Landlords Facebook community or drop me a message down in the show notes, and I'd be happy to find a time to be able to connect with you, learn what you got going on, and see what we can do to get your portfolio moving soon. Thanks so much, and see you next week.
Thank you for listening to the Lady Landlords podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlords.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.